Hey guys, Tony here. Welcome back. It is Monday, June 24th. Time to do our third installment of the AMC Q2 box office update. As the numbers are coming in better than we thought, how is that going to impact the cash burn for Q2? And I want to talk with you briefly about AMC versus Cinemark versus IMAX price action. I saw a lot of comments on that today. Let's get right into the info. As we are about to put the two bad quarters of 2024 behind us and in the rearview mirror, let's begin by talking about the price action that we're going to be seeing on the four tickers that I have up on the screen here. We got AMC, IMAX, Cinemark, and MCS, which is Marcus Corporation. Four movie theater companies. Three of them on this screen are profitable in 2023, both operationally and on cash flow. One of them is still a recovery play, AMC. So I don't want you guys to be flailing in the wind and screaming at the void. Why is AMC lagging and these other three are getting positive price action? We are dealing with three companies that are very different than AMC. AMC is not going to be profitable until box office gets a little bit over $10 billion. And at the same time, we know that AMC has debt, which they need to restructure and push out. And these others aren't dealing with those issues. So to try and force yourself to do a comparison is just going to leave you frustrated. If you just want to yell into the void because you're frustrated AMC's not moving, I get that. But if you truly want to understand why one might not be moving up and the other three are moving up, I have been providing quarterly coverage every time Cinemark or IMAX releases their earnings to help you understand the finances and why they are different than AMC. That is not negging on AMC. It's just finance, guys. It's accounting. And Wall Street looks at these other companies different than AMC because they don't have the debt burden. They have positive earnings and positive free cash flow. And for AMC investors, the hope is that one day in the near future that AMC can be in a position much like these companies where it is operationally and free cash flow positive. But until then, you're going to be banging your head against the wall trying to understand why the price of these other three companies moves up and maybe AMC's does not. Right now, what I'm trying to help you do is understand the overhang of what AMC is dealing with the debt restructuring, potential dilution related to that, and the cash burn. And as long as it is dealing with that, it has issues unique to AMC that is not currently holding these other companies back. AMC being the big guy on the block, having 2 to 3x the number of locations of these other smaller competitors, needs a little bit bigger box office domestically and globally to excel. And we're not quite there yet. So check in with this channel from time to time, get a reality check of what the numbers look like for AMC and when potentially they get to that point where they can be operationally and free cash flow positive. And then I think you see the analysts' targets for AMC begin to change. Hopefully that will be in 2025, maybe in 2026. The facts are the way AMC is set up right now, it is built for a big box office, and we're just not quite all the way there yet. But hopefully we will be as we move into 2025, 2026. Because of this very conversation, I had somebody block me on Twitter today, got called a shill because I like to talk numbers, finance, accounting, 10Qs. Guys, I don't report the numbers. The companies report the numbers. I'm just here to try and help you understand when you ask why one thing is happening to one company and not to the other. You can always go to the filings, look at the financial statements, and everything makes sense. I do apologize if covering the financials hurts your feelings, and feel free to block me on Twitter or YouTube if it does. But for those of you who want to really understand the numbers, we're going to keep on going. Now let's talk about this box office because it is exceeding my expectations as we get closer to the end of Q2. There is 1 week left in Q2, just 7 days, but we are at now $1.7 billion, $1.709 billion, thanks to Inside Out 2. Now, in our family this weekend, we went and saw The Bike Riders and Inside Out 2. Both of those movies I can recommend to you. And in this coming week, I'm looking forward to going to see Horizon with Kevin Costner and A Quiet Place Day One. If you like the movie industry, go watch some movies before the end of this month. Every dollar counts. I feel pretty confident saying that 1.8 billion domestic box office is easily attainable with a week to go, and Quiet Place Day One still coming up in this last weekend of the month. I think that 1.85 billion is also attainable, possibly 1.9 billion or slightly above. The difference between 1.7 billion box office, 1.8 billion, and 1.9 billion is huge for a company like AMC, where we're looking at having a net loss for the quarter. Each one of these different thresholds of domestic box office and global box office means as we go higher and higher in box office that we have less and less cash burn. The lower the cash burn, then the less pressure management of AMC has to deal with about managing their cash and having to dilute just to have enough cash to do day-to-day operations. So I want to see higher box office numbers to lower the risk of a dilution to manage cash. There still is a risk of dilution to deal with the debt restructuring, and that's something that we can't really avoid. For this weekend that we just completed, June 21st to 23rd, the box office came in at $146 million domestically. $100 million of that was attributed to Inside Out 2. $100 million for the weekend. That is down from $154 million last weekend, the opening weekend, and we will likely see the number go down a little bit more into this coming weekend for Inside Out 2. But then we have the opening of A Quiet Place Day One, and it is forecast to come in probably somewhere around $50 to $60 million for the opening weekend for people that are very optimistic about the opening weekend. In this week that we're in right now, this last week, I'm going to be watching the daily numbers Monday through Thursday to see if we can stay on pace with what we did last week in the $20, $25, $30 million range. If we can, then this quarter is going to end up pretty good, maybe even over 1.9 billion. So you're wondering, how do those different box office numbers, 1.7 billion domestic, 1.8 billion, 1.9 billion, how do they affect the cash burn? In my spreadsheet for Q2, I just have a placeholder for CapEx of $50 million. We don't know exactly what the number is for CapEx until AMC reports it, but for sake of this example, that's what we're going to use. We're looking at the yellow line here, the total free cash flow for the quarter. At 1.7 billion, the cash burn would be $244 million, give or take. 1.8 billion domestic box office drops that number to $230 million cash burn. And if we get over 1.9 billion, drops it all the way down to $155 million negative free cash flow. So that is almost $100 million improvement on cash burn if we can end this quarter at 1.9 billion versus where I was worried we were going to end up as we began the month of June. Disney, Pixar, and Inside Out 2 have really saved the day as we finish up this Q2 and will help minimize the cash burn for AMC for Q2. Moving into a quick discussion about price action and what I'm doing with AMC. As we have previously discussed here in the channel, I did buy in the lows there in April and sold into the run-up in May as we pushed over $10, $11, $12. And I have been waiting for the price to come back down to start getting the absolute best entry that I could. I did pick up some shares on Friday. This week, I sold some puts with a $4.50 strike, meaning that if it ends this week under $4.50, I will be buying some more shares at the end of this week. If we end up below $4.50 on Friday, I would really prefer to be buying around $3.50 to minimize any impact that I have to worry about from any future potential dilution or debt for equity swaps related to paying off the debt. So I am keeping most of my AMC position in cash and only very gingerly re-entering the play, because I do think that the price action is headed back down, but we are at that very weird inflection point where we're going to be entering a very strong Q3 and Q4. So I don't know that I'm going to get it exactly right. It's going to take day-to-day monitoring, week-to-week monitoring, and I am going to remain flexible. And that is the power of staying in cash, is that I have flexibility. I watch this ticker every single day, and I can stay in cash and buy if it gets cheaper, or if another run-up starts, I can jump in at any moment. So that is what I'm doing. I'm selling puts as the price comes down to generate premium income and get an entry if it ends up the week below my strike price. And if we keep going down every week, I'm just going to keep gingerly re-entering the play, trying to get the absolute best entry. And maybe I'll get lucky and time the bottom, and maybe I won't. I will keep you updated, and please let me know in the comments how you are playing it. This is still a speculative play. The company is going to lose money in Q2, and we know that they need to address the debt either through issuing more equity for cash, less likely now, or doing some debt for equity swaps. I can't tell you the exact timing, but that is the whole point of doing this video, to talk about cash burn and how I'm feeling. Let me know how you're feeling down in the comments below. Thank you for your time this evening. Thank you for watching. I am Tony Denaro, and I will see ya on the next video.